Welcome, bienvenue, in other languages I don't know. This is Professional Insights brought to you by the National Referral Network, hosted by the two guys that are just the two guys today because we don't have a guest this morning like we normally do. So we're going to talk amongst ourselves today, okay?
I'm looking forward to this one, Mike.
I'm looking forward to this one too because we're going to talk today. And by the way, this broadcast is for the edification of all those who would make use of this information for their own purposes. We hope the information is useful. We're confident that it will be because today we're going to talk about how to hire a financial advisor, how to know a good egg from a bad egg, how to know what's right for you, how to, which questions to ask. There's a lot of mystery surrounding this, or a lot of there are a lot of folks out there that brand themselves as financial advisors that really aren't. It's just we're going to try to peel back the layers of the onion and help anybody who would watch this to make better decisions. So, Mike, we are going to begin by talking about the different kinds of advisors you encounter out there in the world. So, why don't I throw it to you first? Who do people typically encounter?
Well, so it's an interesting question, Mike, because you one of the things that you and I spoke about is that there's a lot of commercials with a lot of these firms right now. And
Right.
I did a search just on YouTube on how to find a financial advisor.
Right.
And you've got an abundance of videos on why not to hire a financial advisor.
Right.
Right. Or who to hire. And so I think there's this term financial advisor, financial planner, or just financial services that is so broad that a lot of people don't understand what that really means. Because it could be a life insurance agent that says I'm a financial advisor, to a PNC guy that says, I mean, there's a lot of things that fall under an advisor.
There are, and let's begin at the beginning. If you are an investor, or let's just say you're building wealth, which everybody should be involved in at some point in their lives. You're starting to do that. And then you're starting to think about how to do it. I think the first question you really have to ask yourself is, what do you want? Why are you doing this? Okay. Now, for most people, it means that someday, hopefully in the not too distant future, you're financially independent. I don't like the term retire because people associate retirement with age. And retirement really isn't a function of age. It's a function of your assets' ability to pay you enough income so you don't have to go to work anymore. Okay.
Yeah.
But stop and think about what it is you want. If you're like most people, and someday again you want to be financially independent, then you have to assess your own ability to actually manage your affairs so that you get there. And if you're like 98% of the people out there, okay, you probably shouldn't be doing it yourself. It's like trying to be your own doctor. Okay. Yeah, you can theoretically be your own doctor, but you probably shouldn't because your doctor has access to information and technology that you don't. Okay. So, and by the way, really, really wealthy people always hire out services to other professionals that have expertise beyond their own. Okay. So this is very, very common amongst wealthy people. So in a sense, I'm saying act like somebody who's wealthy, even though you might not yet be. Act like what you want to become. Okay. Fair. Is that a fair assessment, Mike?
I think it's an extremely fair assessment because there's a lot of talk about the separation between the haves and have-nots, and although money is a separation,
right,
the rules of the game apply to everybody.
They do. So think about what it is you want, and then really when you hire an advisor to do it, or really a professional to do anything, you're hiring people to have expertise beyond your own. So for everyone from your tax person to your plumber to your mechanic, it doesn't matter. They can do things you don't, which is why you hire them. Okay. But I don't necessarily need the world's best mechanic who charges way more than my guy down the street if my needs are simple. Okay. So you're really hiring oversight, and you have to consider, well, how much oversight do you actually need? Okay. All right. And what kind of advisor fits that bill? Now, we were talking earlier about advisors who are known as fiduciaries. Okay. That maybe the first question you should ask the person you're talking to is, are you a fiduciary? So what's a fiduciary? Fiduciary is somebody who has a legal responsibility to act in your best interest. They don't just say they do it, they have to do it. Okay. And there's a difference, Mike. There are a lot of folks out there who are very product focused, very product oriented. A lot of them in the insurance part of the financial services world. You've encountered this a lot, right?
Yep, yep. And I don't mean to pick on life people or life people. I don't mean to pick on insurance people. I do have my life license. I get it.
All right. So right.
Um, but the challenge I have, Mike, and this is one of the things that you and I spoke about, is when you say that you're a fiduciary, but you're only selling a single product, and as a fiduciary, your role is to do things in the best interest of your clients, and yet you're only selling a product. I have a challenge with saying that that person is a fiduciary.
Well, I think it's very true. It's like the old saying, when all you have is a hammer, everything starts looking like a nail.
Yeah.
And there are a lot of practitioners out there that are operating in this manner. And by the way, they're easy to identify. I think very early on in any conversation, you'll know what their orientations are. But I also think that someone's tenure in the business, how long they've been in the business, I think that kind of matters. The industry itself has a very, very high mortality rate inside the first 5 years. So now, am I saying don't hire an advisor who's been in the business less than 5 years? Not necessarily, because if that person is working as part of a larger team, that still can work very, very well. Because the bottom line is when you first interview a prospective advisor, it really should be about whether or not they're listening to you, not whether they are extolling their virtues or talking about their product or talking about their company or all that stuff. They really should just be listening to you and asking you about the things that you want. Is that a fair assessment as well?
Absolutely. I look, if you talk to anybody, and this is like to your point, Mike, a mechanic, a doctor, it doesn't matter across the board. If they're talking down to you, and we're talking about your health, your wealth, your financial well-being, then it's probably not the best person for you. I don't care if they call themselves a fiduciary or not. It's your money, and
Yeah.
they need, and they ought to, according to being a fiduciary, look out for your best interest, and that means not talking down to you.
Well, and you actually see that, you can see that with really, really seasoned advisors who are more interested, at least it seems to me, they're more interested in telling you how impressive they are than in listening to you. Okay. And that could be true of somebody who's been in the business 20, 25, 30 years. Okay. So, on one hand, somebody who's been in the business that long probably has the depth of experience to do a really good job. But on the other hand, if they're not listening, it's probably not a fit. And somebody who's been in the business, I don't know, 6 months could be a really, really good fit if they're really, really good at listening to you and they work as part of a larger team that is part of a larger brain trust that has a whole bunch of experience. Okay. So there are different ways to get there.
Now, Mike, a lot of the things, when I was looking this up, there's this correlation between a financial advisor having fiduciary duties and then being certified as CFPs. Is that a be all end all, or do you have to have your CFP?
No, you don't have to have your CFP. I look, advisors that are pursuing their own potential professionally is always a good thing. And Lord knows, to get a CFP is not an easy thing to do. And you've done a good deal of work to get there. But I'll say this, and I've done a lot of academic stuff in my career. And it's always, I always wind up thinking, how much of this am I actually going to use? Some of it, yes. Some of it, no. So does being a CFP prepare you to be a better advisor? In some ways, yes. In a lot of ways, no. And in some ways, there's an indoctrination that goes on that maybe is sometimes not in the client's best interest. And frankly, just because you have a professional designation doesn't mean you're a better listener, and it doesn't necessarily mean you're a better practitioner. Okay.
I mean, that was one of the worst experiences I've had. Is I went into a life insurance company. It was a large one, and the director of the office said, "Hey, open up your phone, start with A, call everybody, and sell them life insurance."
Right.
And the biggest problem I had is, one, Mike, what if they don't need it? because if it doesn't fit in a financial plan, and two, I don't think it's sustainable either, which is a different conversation, but it's not how you build a business.
Well, and let's talk for a second about people selling products. There, by the way, there's nothing wrong with somebody who sells products if you need the product.
Correct.
Okay. If I walk into Best Buy and I need to buy a refrigerator, they're selling me a product. But if they're good at it and they direct me to the right refrigerator, then I'm grateful. Okay.
Yep.
So there's nothing wrong with that. I think that somebody who has or is product focused should just kind of be that. Like, I am the life insurance agent and this is my expertise. Great. Okay. But don't portray yourself as a financial strategist, financial advisor, whatever, because you're really, in the traditional sense, not. And again, and this goes to how advisors get paid. More and more in our business now, advisors are getting paid advisory fees. And what that means is you're getting a tiny percentage of what they manage on your behalf, which means their interests are aligned with yours. They do better when you do better. Okay. There are advisors out there that are product focused that earn commissions on the sale of products. And that population is kind of dwindling, but it's still very active in the insurance space now. And this is probably a separate discussion, but there are insurance people out there who make very, very nice commissions if they sell you a particular product, particularly things like guaranteed annuities and so forth. I mean, if somebody, just to give you, like, if you put $100,000 into an annuity, for example, because your agent said that was a good idea, agent probably makes anywhere from $4,000 to $7,000 on that single transaction. Okay, that's a nice piece of change, and that can be a very, very powerful motivator. So what it goes to, for I think one of the best things that anybody can do if you're talking to a financial advisor is ask them, how do you get paid? Okay. If you are an advisor who gets paid advisory fees, you are a fiduciary. You must be a fiduciary, which means you have a legal responsibility, once again, to do what's in your client's best interest. Okay. So, and it's still a murky picture out there, but I think these are important questions to be asking.
Yeah, I think another one, Mike, is are you part of that team? I think you highlighted that a little bit ago, but in that, like, what services do you offer? Who's part of that team, and how do they all play together?
Right. I mean, what are your resources? What's behind you? Okay. How long have they been in business? What is it? What do they do? You start peeling back the layers. And I think and by the way, let's talk for a second about if you're flying a larger firm's flag, like a JP Morgan or a Morgan Stanley, or a really, really large firm that most people have heard of, doesn't mean the better advisors are in those firms. As a matter of fact, the best advisors tend to leave those firms because being at those firms is a very, very restrictive way to do business. You're doing business the JP Morgan way or the Morgan Stanley way. Maybe, and there often are two competing agendas. There's Morgan Stanley, and I mean, there's this large company agenda that advisors are trying to kind of toe the line, and towing the line might not be in the best interest of the client. Okay. If you go into the JP Morgan, if you go into Chase and you hire the JP Morgan advisor, the chances are they're going to pull a product down from the shelf and say, here. Okay.
Absolutely.
The ability for them to customize it. Think of a tailor making a suit for you. They don't have the ability to be a tailor, really.
Unless you have a lot of money, and then they'll tailor anything for you.
Well, even if you have a lot of money, the weird part about it is not so much, as much as you would think. Okay. They'll tailor it so long as the big company is happy with what you tailored. I think is a good way of saying it. Okay?
Absolutely.
So more and more in our industry, the best advisors are independent, meaning they formed their own firms. They have affiliations with larger firms, but they're not flying the flag of the larger firm, nor do they have to toe the line for the larger firm. They're truly independent, which means they truly can customize on your behalf. And they also tend to work. The last point I want to make is they tend to work, or can work, holistically. They marry financial planning, because a lot of this makes no difference unless you know what it means at the end of the rainbow. If you have an advisor who's managing an account or group of accounts for you or whatever it is, it somehow needs to get related to something you want, which brings us back to the
Back to the
beginning.
beginning.
What do you want?
Yep.
Okay. Am I going to get what I want based upon what you do? Yes or no, Mr. or Miss Advisor.
Yep. And the important part is that, are they explaining a plan in which you understand?
Right. That's the other thing. You know, if you're, and very often, and I've been in meetings like this before, and I was guilty of this early on, you get enamored with your ability to explain the science, how the,
Right.
you know, the economics.
Like a prospectus you get from a mutual
Right.
fund.
Oh
Like,
my God, look at what it says on page 72.
yeah, and all the fancy graphs and all these
Right.
things.
Look at it.
This looks amazing.
Isn't this amazing? You're right. And you understand all these metrics and you're so happy with yourself that, and you know, your clients don't care, nor do they understand it. And often they'll look at you and go, oh yeah, that makes sense. And they walk away. What did you say?
Yeah.
Right.
And then that plan goes in the drawer that they never look at again because they don't understand it.
Yeah. And most financial plans, by the way, the printed versions of financial plans used to be almost 100 pages, some of them. Okay.
Oh, that sounds like a great read.
Because yeah, it's a great read. I did one that was 14 pages when I summarized the whole thing for a client. He still didn't want that. Okay. It was still too much. Okay. So there's your advisor needs to have the ability to break all this down for you so that you are feeling good about what's going on. And most importantly, you are going to get what you came for. And if you're not, they can tell you why.
And then, so how often should an advisor / fiduciary be communicating to their clients?
Well, in my opinion, and I think in our firm's opinion, you should see your clients at least twice a year, even the small clients. Okay. Those that you are charging an advisory fee to, that is, because really the only way to develop an effective partnership with any client is to do that. Is to be in contact with them all the time. They need to begin to develop a level of literacy in this area. And it is astonishing the level of illiteracy that is out there in this area. Okay.
Yeah.
They need to develop a level of literacy. And the only way they're going to get there is if you see them and talk to them a lot. So you should see your client at least probably 3 to 4 times a year for larger clients at minimum. So you're connected to people a lot.
Yeah, it helps. I mean, have a plan that's understood. Have that plan communicated to you, because we forget things, Mike, right? We don't always remember what's in the plan, but to have it communicated with you, at least you know what's going on.
My mantra has always been with anybody I hire, solve my 2 things: solve my problem, and if you can, make it painless.
Absolutely.
That's it. So that is all I have. Anybody watches this has questions, please reach back out to us. We're happy to answer any other questions on this front. But the National Referral Network is in existence because we realize that all the professionals in it realize that they can't do everything. Every professional realizes there is a limit to their expertise. So it's really professionals linking arms together for the sake of just elevating the client experience.
And I think that's huge, Mike, to make sure. I always liken it to that financial junk drawer, right? We want to have a clean of picture as we can.
Right.
And some of those pieces fit, some of them don't. And maybe they fit later on, but to understand where those pieces are and how they incorporate into your plan is extremely important.
So you want to send us out. We will be back next week. Thanks everybody for watching this, for those of you that did. And we'll be back next week as always. We'll have a guest. We don't know who yet, but we will.
We will. Appreciate it. If you guys find it helpful or intriguing or anything, please like, subscribe, leave a comment below. We do look at those. We do answer them. If there's anything we can do to help, please let us know. But until next Tuesday, Mike, hasta luego.
Hasta luego.